What is good, Tesla family? It's Ray J back with another video, and in this one, I'm going to be talking about the one and only Tesla stock and what you should be looking after for the future. I'm also going to do some in-depth technical analysis and give you guys my price prediction for tomorrow based off what the charts are showing and based off what the data is suggesting. I'm also going to break down what's going on for this week as we have the big FOMC meeting and also some very big updates that will affect China and Tesla. Now, before I break anything down, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner, so don't take any of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. And not only benefits me, it benefits the entire Tesla community as a whole. And the last things, if you guys can, please check out the Weeble link down below and in the description. If you sign up for Weeble, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $2,000. And the best part is, any of these 12 free stocks could be a free Tesla share. It's a limited time offer. The offer ends in just one day. So tomorrow is your last chance to get those 12 free stocks. With that out of the way, let's get on with the video. Looking at Tesla, we had a pretty decent day on Friday, and looking at what future guidance is kind of like anticipating this market, we are anticipating some more future upside, at least approaching the FOMC meeting. Now, I mentioned in my previous videos about giving you guys like a 2 week forecast about what could end up playing out for like Tesla and the markets, but it's very dependent on the FOMC meeting. That's the next major market moving event that's coming out. Currently, the market is pretty greedy. We're seeing lots of fears subside. People are becoming very excited. And the big thing to remember is between November 1st and the 2nd, we have the FOMC meetings. So until then, we have one more like full day of free time where the Fed is not going to be speaking. This gives the market more of an edge to continue pushing up. But November 2nd is going to be the big day to be watching for because it depends on what Jerome Powell says, and this will have a big effect on the market. So if Jerome Powell comes out and he's super abrasive, he's strict, he's stubborn, he's hawkish, if all these things continue and he does not show any signs of potential pivot for the near term, then it's very likely that the market could actually see a bit of a reversal and start coming down. But if Powell does not necessarily take a more like abrasive stance and he ends up just announcing that, look, the Fed is going to look at the data and they may not be as aggressive as some people think, and he shows some signs of them kind of like softening a bit on these hikes, just for instance, the market could continue to rally, and that seems very possible. Now, one good thing is, according to CME Group, you guys could see that the data suggests that the market already almost fully priced in a 75 basis point rate hike. We're about 80% there, but we're not entirely there yet. So this means that if the Jerome Powell and the market are going to be taking in what's about to come from the Fed, there could be a little bit of downside afterwards. But if things are not too bad, we could see a bullish continuation a little bit after the FOMC meeting as well. Now, for the data for Tesla, real quick, looking at the options chain, max pain is at about $220. However, this doesn't necessarily mean Tesla has to close around here, because this could also be adjusted depending on the put to call ratio and how much people are buying. But right now, there's a little bit more puts than calls that have been bought. And once again, like I mentioned for last week, if one side is a little bit more over leveraged, the opposite is what tends to happen. Does it always happen that way? No, but it tends to do that. Now, for the data for Tesla, we are noticing something very different in this market. Now, one thing that makes the market look more like a facade, as I mentioned previously, is the fact that a lot of these tech stocks, a lot of the Nasdaq stocks are kind of trailing behind the S&P 500 in terms of performance. Looking at the price comparison, we could see the S&P 500 is pushing up, but looking at Tesla and other things like that, they're lagging behind a bit. So I'm hoping for more of a push for them, and that's also going to be dependent on other factors. However, we could still see this very keen correlation between the Nasdaq and the SPY, which is a sign that, look, if the market continues pushing up, this doesn't mean that Tesla's going to be up 10%, 8%, but it could actually push up a little bit more from here. It still has potential to do that. Now, as far as Tesla goes, looking at the price pairs ratio right here, it is a little bit low right now. All right, this is a sign of weakness, but it's starting to push up a bit. It's starting to curl right here. So if this does start to push up a bit, this would show some signs of relative strength for Tesla. And I'm hoping that this continues as time goes on. Now, as far as buy ratings go, Morgan Stanley still believes that Tesla is going to outperform the market going into the future. And from a seasonality basis, historically, 53.18% of the time, Tesla's green on Mondays. So I'm basically hoping that we do see a green day for tomorrow, a nice continuation, and I do think that's very likely. Now, what else is very interesting to note is the fact that the short interest has been declining a bit, which is a sign that some of these shorts are starting to cover, and this is part of the reason why the market was pushing up a bit. And what else is going on is when a lot of these institutions, these market makers, when they have so many of these puts, when they sold so many of these puts, what they tend to do when the market starts pushing up, first off, the market makers start doing that, then they start closing puts. Now, to hedge for closing puts, the market tends to allow for market makers and institutions to start buying shares into like the S&P 500, into like Tesla, and that causes the market to push up when one side is a little bit more too over leveraged. So that's part of why the market was pumping, and it looks like we do have momentum to continue from there. The one thing that is a little bit concerning for Tesla, I'm not trying to like spread FUD, and so far there's no confirmation that this is affecting Giga Shanghai as of right now, but there are a lot more lockdowns in that area in China. This is something I mentioned like many a weeks ago being one of my like red flags, something that I'm kind of cautious about. This is going on right now, so I'm hoping for the best for Tesla. I hope this does not slow down production and things like that. And overall, these lockdowns are continuing, so it may have an effect on Tesla. It certainly had an effect on the EV sector just a couple of days ago when the news came out, but much of that is priced in as of right now. Now, if that does progress, this could have a negative effect on the stock, but so far, like I said, there's no confirmation of that. So there is still room for more potential upside. Now, as far as Tesla goes, what are we seeing in the charts? Well, it's very important for me to note that the S&P 500 does have more potential for potential upside. We actually managed to break above very key resistance levels. We retested that 390 zone, and it's looking like 392 is very possible on the SPY. Now, the thing about that is as we keep going higher and higher with such a big green candle, with so much pushing up in such a short period of time, yes, we could continue pushing up, but a small retracement is also possible approaching FOMC. So maybe by like November 2nd, the market kind of pulls back a bit depending on what the Fed says, and we kind of pick a direction after that based off the meeting. But until then, it does look like there is a lot of potential for more future upside, and I do believe the market is going to pump up a bit more from here. Looking at the QQQ, very similar story. This thing did begin to push up. It actually hit my target of breaking above the 280 mark. And we do have more potential on, let me use a smaller time frame to give you guys a more meticulous amount of data. Going back right here, we have the next major resistance level around that 283 to 284 range. We could actually approach that very soon if the market continues to pump, which I believe it will. And for Tesla, that's a good sign because if the Nasdaq is pushing, this could also help this stock. Now, I mentioned in my previous videos, all right, the critical zone for Tesla is actually right here. So let's just start off by looking at this zone. Right here, it's around this 238 to 240 zone. This is where Tesla has a gap, and we know Tesla is very attracted to filling these gaps. Now, what I'm noticing is Tesla is showing nice momentum. We really want to start pushing up. It was actually a little bit more bullish near the end of the day on Friday than I even predicted. So we are showing some nice signs of a nice continuation, in my opinion. Now, in order for us to get confirmation of this very, very nice trend, I want to see Tesla hold 230. We need to hold it. We can't just like push above it temporarily, then come down. If this thing breaks and holds 230 and we start pushing to like the 233 level, we start kind of like trading sideways in this zone, consolidating, it's very possible for this thing to get a big boost and start pushing all the way up to fill the gap, approaching the $240 level of resistance. Very, very possible. And if the market is said to be more bullish, I think it could happen in a relatively short period of time for Tesla. But for tomorrow, I'm going to be a little bit more conservative with my prediction because of the fact that Tesla so far has been lagging a bit behind the overall market. That's based off historical data, at least right now, because Tesla is notorious for having a beta of over 2.0. This means that when the Nasdaq is up like 1%, for example, Tesla should be up 2% to 3%, like around there. Instead, we saw like the Nasdaq and the SPY were up like 2.5%, 2% on Friday, and Tesla was only up like 1.5%. So it was lagging behind a bit with the whole Twitter fiasco, and much of that has been priced in, so I'm not as worried about that. And on top of that, the other thing that worries me a bit is the situation in China with the whole lockdowns. I'm not as concerned about those as of right now based off what came out. So For Tesla, what am I anticipating? I'm anticipating a nice push above 230 relatively soon. We have strong resistance at 230 and 233. This could slow us down a bit temporarily, but if we get a clean break and continue pushing, it is possible to fill this gap and then maybe kind of like drop a little bit after that. But overall, I'm anticipating more potential upside if the market continues. So what I'd predict is something like this. Into open, I wouldn't be surprised if we get a really nice push just like this. Tesla's going to probably retest 233. Now, I'm not 100% sure if we're just going to hold 230 perfectly or if we're just going to continue pushing even stronger than last week. Either are very possible, but I like to be a little bit more optimistic. So I'm anticipating some more kind of like sideways action between 233 and 230. And I want to see a nice push. If the market continues to pump, very possible, guys, Tesla could go to about 235 a share. And if we do go this high, if we do manage to hit like the 235 zone and we end up holding like 233 as support, it's very possible for Tesla to fill the gap and approach 240. Now, this will likely happen within like 2 days. So whether it's like the same day or the next day, I would say it becomes very likely this thing goes for the gap fill if that is what we end up seeing. So a very bullish possibility would be Tesla holding this zone, then pushing up and filling the gap all the way up here and hitting like that 240 mark. For getting a nice rejection off that and kind of coming down a bit, that's very possible for tomorrow. Now, another possibility is because of the fact that Tesla has been lagging a bit compared to the relative market. And this is the same thing with lots of tech stocks out there, lots of blue chips. It's also possible for Tesla to kind of push up here and kind of like trade sideways in this 233 to 235 zone temporarily, and we might just kind of range trade from here a bit before we fill the gap a little bit later, maybe like on November 1st or the day after. But as of right now, I'm still a lot more bullish than bearish for the short term based off the previous trends and based off what I'm anticipating for the markets. With that said, thank you all so much for listening. Please have an absolutely incredible rest of your weekend, and I will see you guys in the next one. Tesla to the moon, because the long term future is still incredibly bright, and peace out.